Hello everyone, George here. Today's 18th of July, Saturday. Just a quick recap of what had transpired in the last couple of days, just to show you why my approach to trading and analysis is completely different from the rest of the so-called experts out there. Okay, so here we've got, that's from FX Street. Of course, you can go on their website and check it out. Article. So pound dollar weekly forecast exposed failure to rise on robust data, strong resistance point to falls. Okay, so this week pound dollar good data is not good enough. UK coronavirus cases continue dropping, supporting the gradual reopening. Okay, so this is more like it's not only what's happening in here in Britain but worldwide. So just to attribute it only to the UK is wrong. So, okay. Okay, more importantly, British jobless claims surprised with a drop of around 28,100 in June, turning the tide. The unemployment rate provided good news for another month by remaining at only, oh please, I mean, who believes this even number? 3.9%, honestly. It's like our prime minister ages ago, this Israeli, he said that there are three types of lies. There is a small lie, there is a big lie in statistics. Just you can see easily cooking the books. Yeah, I mean, from able population of those who are able to work, let's say 31, 32 million people, we're going to be headed towards 4 million. So that's already over 10%. So I don't know where they're getting these data numbers from. Okay, so we talk about pound dollar. Okay, so daily new deaths in the United Kingdom. Then we've got, okay, nevertheless, a bit economic figures fail to push the pound higher. The lack of movement may be attributed to several misses. Monthly gross domestic product rose by only 1.8% in May. I mean, whoever you're gonna ask, I mean, if you're gonna if you're gonna visit Main Street, half of the restaurants are closed, out of business. Other shops as well. So, what kind of? Okay, so okay, never mind. We're talking about May. Yeah. Okay, so now it's July, but let's talk about May. Okay, here we have Andrew Bailey, our governor, Bank of England. He told MPs that interest rates will likely remain at low levels for at least 2 years, yet that was no shocker to market participants. Of course, no way you are able to increase, to raise interest rates. Why? Because you're going to destroy property markets. All those who got mortgages, they won't be able to afford mortgages. People are losing jobs, and now you're going to increase interest rates, and instead of paying, let's say, £700-800 for your let's say monthly mortgage, hypothetically, you might end up paying 1,000. So it's going to have a detrimental effect on those paying mortgages. Okay. Two other downbeat yet known factors are the lack of progress in Brexit. I mean, are they still talking about the Brexit? Okay. And concerns that the government's fiscal stimulus package is insufficient. I mean, well, okay, how much more do they need to print? I mean, I told you, I mean, before, I mean, from my previous videos, I mentioned something that you can't print your way out of recession. I mean, you can try to stimulate, but it has to be done gradually. Not that, I mean, we already pumped, I don't know, more, like 350 billion pounds within 3 months. Overall, the pound struggled to rise, perhaps finally succumbing to previous concerns. The same can be said about other currencies, major currencies, including dollar. Okay, retail sales. Okay, okay, this is United States. Okay, cases, I presume. Okay, this is the coronavirus cases, deaths. Okay, UK events ongoing, European retail sales, PMIs. Okay, Purchasing Managers Index. Okay, it's good to keep an eye on it, but you can see clearly from here it's already below 50. Okay, was previous 47.1. They anticipate 47. Me and my students, we don't really care about these things. That's not important. What is important? You need to be always in the trade. Okay, let's continue. Okay, U.S. events. Okay, again, virus, epidemic, and its impact on the consumer. Yeah, I mean, whenever it's like, doom and gloom I don't think gloom is everywhere. I don't think so. You really would like to go out and start shopping. Yeah, it's not really that healthy. Okay, all this data here. Again, I mean, look, if you not from payrolls, they love mentioning that. If you're not, let's say, an economist working for, a bank or financial institution, don't you as a trader don't waste your precious time on this nonsense. Okay, that's all. Oh, let's get to technical analysis. Okay, okay. There's a narrowing triangle or a wedge. I love how they call these things. Okay. Oh my God. When I started out in trading in Forex, 2010, probably like 11 years ago, 2009, 2010, um, then I would pay attention to these things. But once you become more and more proficient, like, expert at what you do, you know this nonsense. Like moving averages again, 2 day, SMA. Okay, support awaits at 25, 35. Oh, resistance. Look at the resistance. 26.7, a stubborn cap during July. The next level to watch is 27. Ooh, so basically, which means what? It's gonna get there. We should sell. We should, put apply short orders there. No way. A round number that nearly converges with us further above is the peak in June. Ooh. Okay, and then sentiment. I mean, come on. Sentiment. FX3 forecast poll is showing that experts. Please, can we have the names of experts and who they work for? Who do they even represent? Have marginally downgraded the average forecast and see different moves for every time frame. Oh my God. Oh, look at this bit here. Okay, that's interesting. Okay, information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only and should not in any way come across as a recommendation to buy or sell in these assets. You should do your own thorough research before making an investment decisions. I mean, if you're what do you call it, a retail trader, no way you would be able to do on your own a thorough research, thorough research because you don't have a financial background. You need to spend at least 2 3 years at uni studying for financial analysis, forecasts, and these sorts of things. Then you need to spend 3 4 years at least working for a financial institution after graduating, and only after that you might be able to do your own thorough research. So for retail investor, they won't be able to do that, and if they need to apply or employ professional services, they need to pay for it. FX3 does not in any way guarantee that this information is free. I mean, of course, who's going to provide you, information for free nowadays, especially? No way. Okay. And now one I would like to bring to your attention. This is Barclays. I used to work for them for almost 4 years. The best company to work for, guys. If you in the future decide to pursue banking career, I don't know, any financial career you'd like to follow. Here we go. There are different personal, premier, business, wealth managers, corporate. Just apply. The best company to work, guys. They are the best. Okay, that being said, okay, let's review their investments. What are already main investments? Look at their defensive approach. Risk refund, but there is no such thing as risk-free. That's true. Okay, do you remember I mentioned before there is, if you want to feel a little bit safe, then you should invest in cash. I mean, it's like you should expose your portfolio to cash. This one contains 63% cash, 20% bonds, 17% shares. But the reason I'm bringing this up, it's not about to talk about what the exposure should be, but look at this pathetic performance. So let's say you started with 5,000, okay, and then after 5 years, you would have ended up with only 1.28% profit before tax. And they also mentioned here, please note performance shown above will give slightly different results than the below, as we have also subtracted the fees we charge. Okay, so you also have to pay fees, Um, I mean, okay. I mean, you can see even from my live trades that with my I'm sorry, with my live account, by the end of this month, I will have generated over 10%. net because it's a spread betting account. So here we go. I mean, I always tell my students, think for yourself, learn, get educated, read as many books as possible, especially, I mean, okay, I'm not going to say read as many books as possible. There's few books I always recommend. And when you subscribe to my course, or if you go to my Patreon what do you call it, link, if you follow Patreon link, there is an option where you can pay a monthly fee, and I will be sending you daily or weekly notifications. First I trade, and then you follow. So I walk my talk. I will never say this nonsense. Where is it? Yeah, information which I provide, contains forward-looking statements. First of all, risk and uncertainty is always involved. That's called being alive. That's being part of life. Yeah. Um, Another thing I would like to point out how difficult it is to forecast future trends. So that's why with me we are always in the trade. I mean, I don't want to say always. I mean, I always say timing is the most important thing. So with my course, you're gonna learn when to enter, and also I use. I mean, these ones here they use like hourly charts. Yeah, like. I mean, there were some analysis there. I read before. Like, where is it? This is like dollars and stuff like that, especially Australian dollar. Okay, somewhere here. Yeah, here we go. I mean, honestly, talking about gold and you're gonna look at the Bollinger and 1 hour formation. I mean, come on, that's ridiculous. And also, why would you like to speculate on gold and dollar? There is no need. If, for example, somebody out there is rich and wealthy, let's say they've got 10 million, 10 million pounds or 100 million pounds. Of course, I presume in order to diversify their portfolio to protect it against inflation, they would, certain percentage at least, between 70%, probably they're going to acquire physical gold. They're going to be speculating on the prices for it to go up or down. They don't care. Okay. And they shouldn't. I mean, if you got 10, 20 million pounds, you wouldn't be so petty to look at the fluctuation of the price of gold, uh, unless you are tennis player, German tennis player. I don't want to mention the name now. Joking, the gentleman lost, I think, $100 million to Nigerian kind of uh, you know. Scam, something like investing money in oil fields in Nigeria. Yeah, interesting. So yeah, please, those of you, I mean, as I said before, I will never ask you to, to subscribe to my YouTube channel. No, I would ask you to like it because it's ridiculous to say that. But if you think that what I'm doing here, what am I about to do here, and what I'm doing here is interesting and fascinating, please get in touch with me. I'm more than happy to discuss intricacies of trading with you guys and girls. Okay, have a lovely evening and enjoy your, I mean, tomorrow Sunday. And on Monday, I'll be updating and uploading my live trades. So thanks so much and have a lovely, lovely night. Yeah, why not? Party time.